Welcome to Trade the Trend, a weekly video about where the stock market is heading. This video is going to focus on the SP 500. I'm going to cover the ASX 200 as well as gold, silver, oil and uranium in a separate video. I'll leave a link for that in the description section below. I'm also going to show you an ETF that's probably going to surprise a few people, so make sure you stick around for that. As always, this is general commentary, doesn't take your personal situation into account. With all of that said, let's get into our first chart. So I'm going to start off with the SP 500. And the theme we've been talking about over the last few weeks has been a theme of consolidation. And that's pretty much remained the case over the last week. We did see a sharp decline on Wednesday. And sharp declines are interesting because what they tend to do is they put people on edge. They make people nervous. And then people start thinking about all these possibilities that markets could really start to fall away and trouble could happen. But I think the point to make at the moment is that so far, what we've seen since the July high really does fit the parameters of a consolidation, not some sort of start of a much larger decline. And just to remind ourselves of like what some of the things we've been speaking about in recent weeks, I'm going to put the Fibonacci retracements on because these are useful just for reminding ourselves that so far this is, as I say, proportional. You can see that the market got down to the 50% retracement in mid-August, had a rebound since then, and we're still currently above where the 38.1% retracement is, being the top of this Fibonacci band. So from that perspective, what we've seen so far is, as I keep saying, a proportional pullback. Let's just get rid of those fibs. Other structures to look at, we've got these rising moving averages. Everything remains on track and okay there. So the base case which I outlined last week is that we're potentially in for several months of consolidation following this high point in July. And another thing we've got to be mindful of is that we're in September. And September is one of those seasonally weak months. In fact, September's the weakest month of the year when you look at the averages over a long period of time. Now, the thing to note with averages is that averages pick up the very worst of times. And that typically doesn't happen every September. Most Septembers go by uneventfully. So September does get a bad rap. There has been some big market spills in September, but most go by uneventfully. Nonetheless, there's a bit of a psychological thing around September, so it's one of those months where we can expect, look, it's a good month for a consolidation story to continue to play out, and I think that's what could happen. I won't be surprised if we see the current S&P 500 price move down towards a retest of this August low. Maybe we can see prices down around 4,300. Again, that would fit the parameters of a consolidation. But at this stage, the evidence just isn't there to support that this is some sort of a larger reversal. And as I've been saying for a while now, I want to stay with this trend. I want to stay with this upward trend that's been in place for many, many months until I've got good reason to do otherwise. And at the moment, that reason just is not there. I don't want to be jumping at shadows. I don't want to be getting out every time we get a bit of volatility. So that's my plan, and I want to be guided by the price action, not by what month of the year we happen to be in. Now let's jump over to the Nasdaq just really quickly on this. Very similar story to last week. Overall trend is up, like I was saying in the S&P 500. We've got rising moving averages. It looks like, for me, it looks like consolidation. I don't see any reason to be calling this a major topping formation. Now, of course, things can change. New price action needs to be assessed as it happens. But just with the price action that we currently have, there's nothing here suggesting that this market is making some sort of a major top. I think, like the S&P 500, I think it needs time to work off the previous rally, and it has been a big, very big rally. It needs time. It needs time to work that off, or I think we can look at the realistic possibility of maybe seeing higher levels. Now, if you're getting some value from this, please hit that like button. Please leave a short comment. Just, hey, thanks for the video. Helps me heaps because YouTube then goes and shows other people, which is really a big thing for me. Please hit that subscribe button also if you haven't already done so. Now, moving along, I want to show you something else which I find really interesting. It is the SPDR Industrial ETF. And what I find interesting about this is that despite all the negativity that we've really seen over much of the last year, even though stocks have been rising, there's still been a lot of negative sentiment. There's been a lot of disbelief. There's still plenty of talk that markets could decline significantly. But despite that quite gloomy backdrop, look what this industrial ETF has done. And if I just compress this, I can actually tell you that it's at an all-time high. So if you read the newspapers and you read the headlines, you'd think there's no way an industrial ETF could be making new all-time highs. All this talk of recession, but it just goes to show you can't manage your investment portfolio by reading the headlines, because the headlines will often send you off in the wrong direction. They can really give you the wrong idea. I think it's really important we assess price action, not headlines. And it's a really interesting structure to take apart. So what I see when I look at this is I see an impulsive rally off the October low last year. And when I say impulsive, I'm talking about a move where you get strong upside with modest pullback, a modest retracement. Strong upside, then another modest retracement. That's impulsive. You get a series of higher highs, higher lows. Then once that move has run its course, we get a sideways consolidation. We get a compression zone where the price action compresses around the moving averages, and then like a spring which has been compressed, it releases and there's another move. In this case, it's to the upside. Another impulsive move. As I was saying before, higher highs, higher lows, strong rallies, mild pullbacks. And what I think we could be doing now, I think we could be seeing another one of those compression zones like we saw back around in the early part of this year. Maybe that's what's going to continue playing out over the next several months. Also worth having a look at the Fibonacci retracements. We just put these in. I'm going to compress this. If we just put the Fibonacci's in, you can see that this pullback came back to the 38.1%, just to the top of the Fibonacci band. And then if we put in the Fibonacci's for the most recent rally, you can see again, we're back at that 38.1. So far, very proportional to what we saw previously. And these are your typical proportional pullbacks to large rallies. Of course, anything can happen. There's nothing saying this market has to go sideways and up again, but at the moment it does follow that sort of pattern that we've seen before. I think the play here remains stay the course. As always, there's always so many things to worry about when the market's rising. As I was talking about with the newspaper articles or the headlines, there's always reasons why the market should peak and turn and start to fall. But a lot of the time it doesn't. So at the moment, the path of least resistance remains to the upside. No guarantee that's going to remain the case, but I think the biggest risk is to scare yourself out of the market and be out completely. And then the downside of doing that is that you end up watching from the sidelines while the market ultimately goes and resumes its a long climb up what they call the wall of worry. So as I've been saying for nearly a year now, I think my preferred play is to remain cautiously long. That's how I'm positioned, and let's continue to read the price action as it happens. But as things stand, the path of least resistance, as I say, does remain to the upside. So let's leave that there for this week. Thank you for joining me. Hopefully that's been helpful, and I look forward to coming back talking to you next week. Till then, bye for now.